The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 5th Fantastic Friday edition of today's Opening Bell on the Trader's Edge. Hope everybody out there had a fantastic 4th of July. A lot of fireworks. We're going to see fireworks in these markets today for sure. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call the power of focus. But first, let me ask you a question. What is your outcome for the day? Do you have a clear outcome for today? Is it written down? Do you know what one is? If you don't have an outcome for today, just spend a few moments. Write down what that is, because the power of focus, it's the ultimate power, and focus can change the way we think. It changes the way we feel, and it'll change what we do in any given moment. In these markets here, you need to stay focused. You know, when we change our focus, we change our lives. When we change our focus, we determine the direction that we will go in. If you want to achieve a more fulfilling life, well, then go through these 4 steps. At least these are the 4 steps that I use. Number 1, the step is write down 2 or 3 things that you often focus on that make you feel stressed or overwhelmed. You see, the first secret to creating change is awareness. So what we need to do is we need to find out what it is that we're focused on that, quite frankly, provides us with no benefit, mainly the things that we fear out there. You really want to have those things written down. Step number 2, write down one or two things, it could be more than that you don't have a sense of real purpose for. You know, things that don't really juice you up, or things that you are doing today that won't really help you achieve your outcome. You see, the way to get more time, which is usually one of the resources that we say we often don't have enough of, the way to get more time and more emotion is to get rid of the unnecessary things that just simply steal our time away. Number 3, as I started off with, write down 1 or 2 specific outcomes or results that you want for your life, or at least for the day. You know, things that will, if you achieve them, they will truly juice you up, because the key is to focus on, always focus on what it is that you want. Lastly, write down, and this is important, what will it cost you if you don't take the time to do those first 3 steps? What will it cost you, your family, your friends, your coworkers, your career, you know, things like that. Better yet, let me state this in a positive way. Write down what you could have if you did achieve your outcome. What are all the things that you could provide to everyone in your life if you achieved your outcome? So those 4 steps are, in order to design what I consider to be able to design the life that each of us deserve out here. Number 1, what are we focused on that stresses us? Number 2, what do you do during your day that doesn't help you achieve your outcome? Number 3, what are the outcomes that would actually change your life? And number 4, what will it cost you if you don't achieve that outcome? Happy 4th of July, the ultimate power in life, folks. It is the power of focus. So let's go focus on these markets here. Right now, we've got the Dow futures up 81 points, S&P up 8.5, trading out at 16.18. NASDAQ futures up 13 at 29.49. Russell 2000 up 8.5, a lot of movement here in the market. We've got the U.S. dollar index, King dollar, up at least $1.29, trading out at 84.70. That means the euro getting whacked here. It's down 190 ticks out here. The pound also getting whacked, down 378 ticks. So we're certainly going to look at the currency market. Gold trading back $29 right now at 12.22. Silver down 73 cents. But, light sweet crude, it does not want to back off. Light sweet crude has broken out. We are going to see higher prices in light sweet crude, especially with everything over. If you were going to blame it on the issues going on over in Egypt over the weekend, well, those things seem to have gotten resolved. Not that there's not uncertainty out here, but I will tell you, light sweet crude has not backed off, with the dollar index being up $1.30 right now. That says something out here. Let's go start off by taking a look at just exactly what the markets are doing, and we're going to switch over and take a look at the daily contracts out here first for the futures. So let's go take a look at the S&P futures contract. We'll pull that up on my screen. If you are listening in on the radio or your mobile device at TFNN.mobi, thanks so much for doing that. I'll do the best I can here to describe to you exactly what we have. Now, I believe that last week we were pointing out to you a kind of a convergence of different patterns that are out here. And so the first pattern we're going to take a look at is we're going to start off, May 22nd is a key day. It was also referred to as a key reversal day as well. Key reversal day requires three things in order to occur inside a marketplace. Number one, you've got to have a market that's been in a strong trend. And it's really, you're looking for something that is extended, oversold, different terminology like this. Well, in the case of the S&P futures, the S&P, all of the markets out there, it was extended to the upside. I like to utilize the relative strength, relative weakness index out there. That's another easy, simple one. So the market was extended. Number two, the intra-session high and low of that day or the bar that you're looking at needs to exceed the prior bar. Well, on May 22nd, it most certainly did that. Number three, and this is important, it needs to go ahead and close in the opposite direction. Just has to be a close. Doesn't have to be a bearish engulfing candle, any type of bearish reversal signal. It just needs to close in the opposite direction. Well, we had that on May 22nd. May 22nd is our high out there. That's our benchmark. Inside the futures, in the ES Mini, it was up at the 1685.75 range. We had another significant high that took place out here, and that was on June the 19th. That level was at 1649. That's really your next touch point. And if you go ahead and you just simply take a trend line from the top of those 2 points, what you will see is the little bounce that we had over the this morning here after the jobs numbers came out, bounced right into that trend line. 1628.50 was the actual 0.786. 1635. Now, when I say the 0.786, I'm really referring to the top of the candle from June 19th, 1649, all the way down to the June 24th low out there at 1553. So if you take a look at from those two areas, you would have the 0.786 retracement at 1628. If you go from the top of the May 22nd candle down to June 24th, the 0.618 retracement. These are key numbers. There's really three primary numbers that you want to be focused on and paying attention to if you're utilizing Fibonacci numbers, at least on the contraction side. You're looking at 0.382, 0.618, 0.786. On the expansion side, you're looking at 1.272, 1.618, 2.618. Those are the key numbers that you want to be looking for. So what we've had is, although the ES Mini did not get up to 1635, the actual tick high so far that we've seen here today, 1630.75. For my work, that is close enough. So we may have, in fact, seen here the high for we now may begin to see the next leg down in this market. It'll be a doozy if, in fact, that is what unfolds. So the key here today, I gave you a key on Wednesday as we were going into the trading session. Going into the close today, we'll take a look at the New York Stock Exchange. But here's the key number you want to be paying attention to. If net declining issues today exceed 523, that will be our reversal signal inside the New York Stock Exchange that it now is beginning to achieve its next leg down. So at 4 o'clock today is when the Tom O'Brien show is on. I'll be hosting that again today while Tom is off for the final weekend here, and so I will have that number for you. But if we do see that number, a minus 523 today, anything below that, what we will see is a reversal. What we will have seen is this. We will have seen the Bulls actually fumble the ball, and the Bears will have taken control. So that'll be the number that we'll key in on, that we'll be watching for. So we can see that numbers-wise, trend-wise, all the work has been done to the upside. Now it's going to be a light trading session today. So if, in fact, you get a break above 1635, well, what that sets up, that will set up a move to 1649. That's going to be that high from June 19th out there. And then from there, if 1657 is not held, and I suspect that it will be, if you take a look at the bottom of that May 22nd candle, it's 1646.50 out there. 1649 would be a 100% move of a move. That would be getting back into the June 19th level. But I suspect what we have seen here is the high for the high for this leg here. Now, that's on the daily chart that we're looking at for the ES Mini. Let's go check out the other charts as well, see what we have going on out here. Let's take a look at the NASDAQ futures. In the case of the NASDAQ futures, if we do really the same types of things, we're going to come off of the trading session from May 22nd's high. That's 3,053.50. Your next touch point is going to be June 19th. That high, 29.99. What you'll see, that's a black line if you're watching us on Tiger TV. And if you take a look at that black descending trend line, it's not a channel line, it's a trend line. What you'll see is that was hit this morning almost exactly. The number that it got up to this morning, 29.71. You're trading at 29.50 here right now. So, down 20 points off of that. So we do have fireworks in the marketplace, no question about it. So you hit that trend line. What you were also doing here, we were getting a total convergence of Fibonacci numbers. You were getting the 0.618 retracement. That was off of May 22nd's high down to the June 24th low. You were also getting a 0.786 retracement, and that was off of the June 19th level all the way down to the low on June 24th. So those numbers were converging at the 29.63, 29.60 level, and then price ran right into the top of that descending trend line out there. So now we've got two that are totally in sync when it comes to the futures contracts. Let's go take a look at the Dow futures. Let's go see what, in fact, they were doing out here. Now, the trend line doesn't really work here. I guess I could probably use this trend line coming off of this little spike high from May 28th. So how about that? That actually works out there. If we do take, let me go ahead and change this to black for you, make it a little bit easier for you to watch if you're following along on Tiger TV. Now, in the case of the Dow, what we really want to be paying, or what we want to note, is we had that same type of convergence inside the Dow chart that we did inside the NASDAQ futures. And that was this. If you go from the May 22nd high all the way down to the low on June 24th, your 0.618 retracement, that number 15,122. The spike high, 15,112. You got to love that. If you go from the actual high of June 19th out here, just as we used on the ES Mini and the NASDAQ, that number was 15,278. All the way down to the low that came in on June 24th, your 0.786 number, 15,106. You actually got up to 15,112. That's a beautiful thing, folks. 877-927-6648. We get back. We got to go take a look at the currency markets, the gold, the silver, light sweet crude, anything else you'd like as well. You can just give us a call here, 877-927-6648. Thanks so much for joining us. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's see here. We got the Dow futures up 97 right now. S&P up 10. Let's go start taking a look at the currency pairs out here. Let's start off with the Queen, see what she is doing. Boy, take a look at this A to B equals CD down. You know, the last 2 days here we've seen a move down in the euro. She is now down below that 0.786 retracement, making that 100% move of a move, coming back here to the swing point of May 20th. Now, I'll blow this up on the screen here a little bit for you. You know, it had made, the euro here had made a nice little Gartley sell pattern. It completed that pattern on June 19th up at the highs of about 1.341. And what that really set up, the ultimate, now, when you take a look at Gartley buy, Gartley sell patterns, what you're looking at is you're looking at an A to B equals CD that is moving in the opposite direction of a trend that had been established. In this case here, the trend that was established was really coming down from the high off, we're looking at a daily chart, the high off of the February 4th time frame, out at the 1.3658 level, all the way down to the move out here of April the 4th as it got down to 1.274. So let's assume assume that you were somebody that had missed out on that trade and you wanted to get into it. Well, the best trading pattern to get in there is an A to B equals CD up. In this case here, your A point's coming off of your April 4th low. Your B point on this is at the May 1st high. Your C point is as it comes back down into May 17th. So your A to B equals CD, that took you up into the range. We can go ahead and measure this here. Just simply use this as our guideline out here so that you can see this. The 1 to 1.272 is really the A to B equals CD. It's why you want to go ahead and have reversal signals, candlesticks being used as your trigger point here, because this did more than the 1 to 1 A to B equals CD. What it did was it did the 1 to 1.272. That is your next pattern out here. That gave you the reversal signal back here on June the 19th. Now, when you take a look at A to B equals CD, normal retracements are always going to be back to the 0.618 level. And in fact, that's what occurred out here back in the, that took till June 26th. So it only took about 4 or 5 trading sessions for it to get all the way back down there. And then what the euro did was it hovered sideways. It was pounding away at that area, and then it finally let loose yesterday. And as it let loose yesterday, not only did it let loose and get down and tick the 0.786 number, the actual close here was 1.2912 and 1.2887 was your 0.786 number out there. Right now, what it's done today is you've gotten below that level. So what is happening here, if we take a look at, now that's your normal retracement level. What the ultimate pattern of any Gartley buy or sell is that it forms the next A to B equals CD down. In this case here, that's what's really taking place with the euro. The A point being the beginning of that move all the way back to February 1st, 2013. So that's your A point. Your B point now being the low of April the 3rd, and your C point happened to be that Gartley sell target area. And that Gartley sell target area taking place here at 1.341. The 1-to-1 A to B equals CD down in the euro takes it to 1.2449. That will set up, quite frankly, a Gartley buy pattern. Now, the question is going to be, that's a 0.786 Gartley buy pattern, by the way. The question will be whether or not that will be the end of the move there. It's got nice, it's a nice pattern. You won't know until we actually see the actual candlestick that forms there. And right now, what we can also see is along the C to D leg. See, when you draw your A to B equals CD patterns, you want to make sure, in my opinion, you want to make sure that you maintain the same angle of that C to D leg, because it tells you so much about the actual, I don't know, what we'll call momentum, velocity of price and what's going on. In this case here, what we can see is that price on the euro has been traveling along the left-hand side of this pattern here, and it tells you it's a strong move. Now, what that also tells me is that it could be a stronger move than a 1-to-1 A to B equals CD. But your first target here, number one, it should be coming to a resting area, and the reason being is because we have a cluster of swing points back to April 4th, that low 1.2947. So you're really trading inside that area. You're certainly trading inside that candle, which is April the 4th. You're coming back into where we last made a low back in May 17th, 2013. You're trading with inside that candle. So the euro should find some type of support in this area, just simply to rest before it decides to go ahead and make its next move down. So that was on the euro-US dollar. Let's go take a look at the Great British Pound. This here also formed a Gartley sell pattern. This one has been relentless. That Gartley sell pattern completed on June the 17th. Really nice Fibonacci numbers there, because you had a 0.618 retracement. You had a 1.272 expansion of your C to D swing point. And what this has already done now, the euro is coming back to the hammer candle that was established on March 12th. So this is a very key level, that level being 1.483. And right now it has not gotten down there, so it has not taken out that hammer. That hammer should act as some pretty good support. It's a 100% move of a move. So a big portion of this move here in the Great British Pound should be done for the day at least. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 84 points. Trade out at 15,072. S&P up 9 at 1624. NASDAQ Composite up 18 points at 3462. Russell 2000 up 9 at $1,000. Even Steven. NASDAQ 100 up 11 at 2953. New York Stock Exchange up 51 points right now. Let's see here. We've got net advancing issues at the moment. Gold back $34 at $12.17. Silver down 85 cents at $18.85. Light sweet crude still up 47 cents as we speak. Leaders in the clubhouse to the upside this morning. We've got Google up $5. Tesla Motors up $2.50. Goldman Sachs up $2.50. Amgen up $1.59, and Green Mountain Coffee up $1.44. To the downside here, we've got other than iShares, we got Newmont Mining, NEM, that's off $1.61 right now. Lynn Energy off $1.70. They were struggling. SEC issues going on with them. Fresenius Med off 4% here this morning. Let's see what else. Goldcorp GG off $1.14. Our call-in number, 877-927-6648. Let's begin by taking a look at these. Let's continue on here. We looked at the currency market out here. I didn't mean to do that on my system. Let's go take a look at, we looked at the pound, the euro out here. Let's go take a look at Goldilocks and silver for the moment. So as we take a look at gold, pulling back here this morning, and it's up against the 0.618 retracement level off of the move off of the bottom here. So it is forming a 0.618 Gartley buy pattern. We're going to go from the low in gold back at 10 o'clock in the morning on June 28th out at 1186, the current low in gold, I should say. And at 1216, that gives 1216.90. That gives us our 0.618 retracement. That's what we have hit so far. That's what it has hit so far. Actually has been down to a low of 1215.90, off by a buck. So if this area holds, and we'll know if it holds if we see a little bullish reversal candle. We haven't seen that here yet. It's a 30-minute chart that we are looking at. In that 30-minute time session here, we're seeing gold get into that extreme oversold territory. If this area fails, we'll see a move back down to about 1203. That would be your 0.786 retracement. So we've got a Gartley buy pattern that has some nice Fibonacci numbers. You got a 0.786 retracement up at the top. You now have a 0.618 retracement down at the bottom. And your expansion of your B to C swing point here is a little bit over 1.618. So we'll see if this area here holds. It is a Friday. If it doesn't hold, 1203 will be the next move down in gold. Now, it hasn't acted too badly considering the move that we've seen inside the U.S. dollar index. If we go take a look at that here, and then we'll switch over to silver, take a look at that move. You now have the U.S. dollar index up at 84.60. It's made a 100% move coming all the way back to the highs here from May 23rd. This was originally a failed 0.786 Gartley sell pattern as the U.S. dollar index had moved up and made that 100% move. It went ahead and backed off to about, I believe, the 0.618 level, or just a little bit below that range. But almost more closely to the 0.786 level, which was 80.14. The U.S. dollar index had gotten down to 80.49. If we see a breakout today above the 84.60 level, that sets up a move to this butterfly pattern. That is your 85.80-ish area inside the U.S. dollar index. But considering the big move here in the U.S. dollar index, gold not doing too shabby. Let's take a look at silver, then we'll go look at light sweet crude, and we'll take a look at the bonds as well. In the case of high-ho silver here, that now has formed the 1 to 1.272 A to B equals CD down. That's coming off of, again, I'm looking at a 30-minute chart here. So we're coming back to the swing point that took place at 7:30 in the evening, June 30th. That level, $20.07. That was your A point. Went ahead and made a retracement. A little bit more than a 0.382 retracement down to the 3 o'clock in the afternoon time frame on July 2nd as it got down to 1922. Makes a retracement back to the upside here. If we take a look at that, it's probably going to be 0.786 or 0.618. Look at that, 0.786 retracement, $19.86. It actually got up to a level of $19.88, and that was on July 3rd. That was at 8 o'clock in the morning. Your 1-to-1 A to B equals CD, that was at $19.03. It has gotten through that area. It's now at the 1879-ish range. At 1890, you were looking at your 0.618 retracement. So somewhere between 1858 and 1879, where we're at right now, we should see, let me go ahead and put this up on the screen too. Let's see on this 30-minute chart here just how, and this is also in the headed to the extreme oversold territory inside silver. So your range really, I'd say about 1850 to 1880, where it is that we are at right now before you would see a potential reversal here in silver. Now let's go take a look at light sweet crude. As we take a look at light sweet crude here, this thing, now, if we're watching this, if you're watching me on Tiger TV, a couple things. Number one, what I pointed out late last week was this approximate 14-point trading range that light sweet crude had been in since last July. And I'm beginning the trading range here, really beginning with the day of July 16th. You can probably go back just a tad further. But July 16th, the low there, $86.41. So that's really the bottom-ish of our trading range. Now, it's been a trading range for 1 year. And when you break a trading range, it's very key. Because when you break it, if there's going to be follow-through, you're going to do the similar move. The minimum of price objective is going to be equal to your consolidation range. Well, we did have light sweet crude bust through this area. It busted through here on July 2nd. We had some additional follow-through yesterday, also today as well. Just your 1-to-1 A to B equals CD up on this takes light sweet crude to 102.84. So far, our intra-session high has been 102.44. So within 40 cents on a $100 instrument, you could say, okay, the move may be over there. And that 1-to-1 A to B equals CD that we are taking a look at, folks, that's coming off of the bottom of the trading range back down here on April the 18th. That price level was 85.61. Your B point on this move here was the top of this rising price channel that was established, and that was on May 6th, 97.17. The pullback that it makes, let's go measure this pullback. And there were two hammer candles right here. There was a hammer candle on May 15th. There was another hammer candle on May 23rd. That hammer candle broke for one trading session on May 31st. Must have been that the bulls were out saying, you know what, they fell asleep with the switch. They came right back in. They established the bottom of that rising price channel on June 3rd out there. If we take a look at that retracement level of our A to B point, we'll see that about a 50% retracement level. That means that you're looking at a minimum of 1-to-1 A to B equals CD pattern, but I think more likely you're looking at more like the larger A to B equals CD pattern that's unfolding here. And that is coming off of the lows back in June of 2012 out at the 77.28 range all the way up to the high that was put in here on September 14th. That's your B point, and your C point happens September 14th, 2012, by the way. And the low, your C point is November 7, 2012 at 84.05. That gives you 107.40. That would be your 1-to-1. But your 14-point trading range, we're going to add to the level of we're going to use $99. So we're looking at 99, 109, and 4. We're looking at 113. And at 113, that'll take you over the swing point from March 1st, 2012. But it looks like this is real. What I was looking for was a retest of the top of this trading range. Was maybe I was looking for that, and with the things working through. Well, I don't know if they're working through, but with the situation the way that it was over in Egypt, to any extent that light sweet crude was breaking out of this range, and we were going to get I wanted to see if this was a real breakout, because what you like to see is price come back and test that, and then say, nope, it's real, and it's going to go up to its next level. In this case here, I think the next level is going to be 107, 109, 113. That 113 will really complete the objective of the move in light sweet crude. If it does come back, if you do get a pullback into the area of about $99, and then it rejects that area, that's the place where you would want to actually take a long position. By rejecting, I mean closing back above the $99 area. Now, it's an easy trade, because what happens is if it does come back into here and it rejects that, you can take the long side with a relatively tight stop, because if price moves back inside the $99 area, what you'll see is it run all the way back down 85.60. So you take your small loss on the long trade and you flip over to the short side of the trade. There may be a little bit of jostling going back and forth, but that's what I just simply call the cost of gathering information. You go out, you pay for information, you buy books, and so forth. So trade this one. That's how I'm trading it. I'm not in the long side of this. I am waiting for it to come back and test that top of the price channel, and from there be able to make our decision, because it's a great trading range. Imagine if this really was a false breakout here. You're looking at light sweet crude moving all the way down to 85.60, but with the U.S. dollar index doing what it's doing today, to me, this looks like a real breakout here. Now let's go over and take a look at bonds. See what bonds are doing. Bonds here now breaking out their low from June 24th. That low out there, 133.04. I still have some indications that look like bonds want to actually bounce from here. Now, what those indications mean to me, those were indications that I'm looking for being able to play bonds to the short side. So and I've got a tool here. I'm not going to describe what it is on the bottom of the screen. And it shows some divergence here. And if this low holds, which is 133.04, I don't know that it will or not, if this low does hold, all it really does is sets up a possible move back to the top of the range out here. To me, in the case of bonds, it's a matter of trying to identify where are your short positions going to be putting on, versus even in this case here where I identified divergence. I showed it in my newsletter service probably last week or so, and suggested to folks that, well, if you want to take a long trade, you can, but the way that I use this is trying to identify where that next position to go short bonds is. Right now, bonds are failing, and I think bonds just simply continue to fail. It's just a matter of where is it that you're going to get on the short side. If we take a look at bonds here, they also are breaking through a trading range. That trading range here, let me just go ahead and draw that on the screen. You're taking a look at a set, I would say that trading range is about like this here, and so we can go ahead and measure that. And what I'm looking at here, folks, I'm looking at the lows back in October of 2011, right around that 135-ish range. The same thing, 135-ish in March of 2012. We're also taking a look at around August of 2011 out there. So pretty decent trading range. If we take a look at the same technique is really being applied here. Let me move this over. The same technique in that when you break a consolidation, which is what bonds have basically done, and maybe that really was the signal out there. If we take a look at where that says bonds could move to, it says your next move down in this consolidation inside bonds will take you right around the 120-ish level out here. So that's what's going on inside the 30-year. Let's take a look at natural gas as long as we are out here. Natural gas trying today to get back inside that rising price channel and failing. It's really struggling. It's really trying to get back inside there, but so far continued failures up here, so I don't really see a decent trade here in natural gas. Let's go back and, well, not let's go back. Let's see. Okay, thanks, Al. Let's go take a look here at some of the things that are popping and dropping here in the marketplace. So let's go look at some of these stock charts out here. Where's my tab for that? There we go, earnings. All right. So let's go take a look at Apple, see what Apple is doing. Of course, it's not there. It's on show tunes. It's on show charts out here. Let's go take a look. Oh, here, I've got the Simon Group up here. This is the weekly chart for Simon Group. As we take a look at it, it's trading out at 158.79. Now, Simon Group here is trading right up against a very strong level, very strong uptrend level. Has not, this is coming off, by the way, 2009. So this is coming off of the March 2009 low out at 24.27. My next touch point on this was the August 12, 2011 time frame, 99.60. The area was tested on the trading session here of October the 7th of 2011. That held, and it was tested here. It's been tested for the last 3 weeks. Actually got just slightly below it last week, but closed right on that trend line today. It's continuing to trend that. That is on Simon Property Group. That is one of the largest weightings, I believe, inside the IYR or something, the real estate, one of the real estate ETFs out there. So you want to make sure you understand what's going on with Simon Property Group if you are inside that trade for sure out here. Okay, all right, good. Let's go let me actually take a look at Apple now. That's what we had intended on doing earlier. So let's go see what Apple is doing. You got Apple trade out at 422 here. And it's above the .382 retracement. Let's go take a look. Now, the volumes are going to be tough to assimilate here. If we take a look at the volume on Friday, only 2.8 million shares, but of course we weren't open that long. So you can't really use volume. I mean, you have to do a bunch of division just to try to get a time frame or volume time frame for this week. So volumes for this week become pretty tough to gauge inside the market. What this does tell us is if we take a look at where it's trading above the 418.25 mark. That was your .382 level. And as you simply take a look at Fibonacci retracement and expansion numbers, in this case here, with Apple making a move above the .382 level, says 436.38 should be on the horizon for Apple out there. That is nothing more than the retracement off of the swing high from May 7th, 465.75, all the way down to the low from June 28th out at 388.87. So that number, 436.38, looks like that is where Apple would like to move up to. Let's go take a look at, see what else we've got out here. We've got LinkedIn. Let's go see what LinkedIn is doing. That is trading up up this morning. Let me refresh my screen out here. LinkedIn trying to trade back into the swing point here from May 15th, but LinkedIn has this little island reversal at the top. Maybe it wants to go rescue all those folks stranded on LinkedIn Isle. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Hopefully everybody out there had just simply a fantastic July 4th, and I'm sure there are a lot of people most people still off today. Right now, the Dow's up 85 points, S&P is up 10, Composites up 20, Russell 2000 up 6.5. And thanks so much for joining us. Stay tuned. The Nadex Bull Bear Binary Option Hour coming up next. And for those of you that haven't had a chance, this is going to be the last weekend here for you to be able to access my newsletter service, Mastering Probability, absolutely free. No credit card being charged or anything like that. All the details are on the homepage of TFNN.com. Go to the homepage. Up in the upper portion, you see breaking news. Right underneath that, there's a link that you can click on. You can access this newsletter for 2 weeks, absolutely free. So take advantage of that over this holiday weekend out there. If you're looking for great trades, great education, which everybody is, just simply go download it. A tremendous number of tools out there that I share with you that you can put to work in your trading arsenal. We were looking at LinkedIn here. LinkedIn formed this island reversal candle on May 2nd. The island reversal is where if you take a look at the prior trading session, now this was at all-time high, so it has some real significance here, and this has been a real high flyer out here. If we take a look at it, the session of May 1st, the very top of that candle, 195.50. And if you look at the very next candle, what happens here with LinkedIn, it gaps up. And the low is 196.43. So it creates a little gap of price there. That's important. The very next trading session, meaning the trading session here on May 3rd, it gaps down. Gaps down with volume, too, by the way. So you had 11.6 million shares. That's volume off of the highs out here. Creates an island reversal. It's a very bearish candle. So far, what LinkedIn has done is it's come back into the area right here of the trend. I should actually move this right down to about this spot right there. Even though it didn't hit it, that's where it's moving down to. You're taking a look at the breakout here, the most recent breakout. So that's the breakdown that we took a look at. In this case here, the breakout really taking place on February the 8th as well as February 11th out there. And just take a look at those volume bars. So you had a nice big gap up, wide price spread because you want to make sure that you fill in that gap out there from February the 8th. And you can see that the top of the 11th candle price, that's 158.90. As price came back there, it did it on June the 5th, and it did it with 2.2 million shares. Got down to 160.20, didn't actually touch it, but it was coming back with 2.2 million shares versus 8.4 million shares. So not enough to bust it down out here, and maybe all that LinkedIn is really doing is setting up a sideways trading range, just working off the tremendous gains that it's had really ever since its IPO. The actual IPO day was May 19th. The high there was 122.70. This did trade as low as $56 back in November 28th, 2011. Then it was off to the races out here. So it's got this is not something that I would short. And the reason, even though it's got that bearish signal out there, that island reversal, what you always need to do is when you're trading long or short, you need to understand where your resistance is and where your support is, because that, in essence, is going to be how you're going to identify your reward to risk. In this case here, it was clear even after this gap down, and the volume day on May the 3rd out there, the gap down was 11.6 million shares, but that was really after a breakout with 13.9 million shares. So even though we've got volume off the top, which we do, you still had to say, hey, look, my real price target on this is probably going to be about 158.90. Never made it all the way there, but pretty close. So, those parameters, you want to look for something where maybe it's got support much further downstream. But support and resistance, very key. And again, I'm going to go back here to the index futures as we close things out. You can see we're looking at the Dow futures. That hit resistance, that downtrend resistance, and 2 Fibonacci numbers. If we go back and we take a look at the NASDAQ futures, that too hit 2 Fibonacci numbers and hit the downtrend resistance line out there. This is now third time is a charm out here. That is some pretty stiff resistance inside the NASDAQ futures. If we take a look at the ES Mini, the S&P futures, it too has done the same. So thanks so much, folks, for joining us. Stay tuned. I'll be up next, as well as back with you from 4 to 6 to do the Tom O'Brien Show. Thanks so much for joining us, and have a great Friday. Have a great weekend, and look forward to seeing you soon. Take care, folks. Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.